ready?
Yes.
Negative team. Thad Woodward from American Banker said, "Let's not forget about the American dream of home ownership is what makes our nation different from every other one on earth. Owning a home remains the hoped-for achievement of a large percentage of our nation's population. Moreover, the housing market creates millions of jobs directly and millions more indirectly in all 50 states. We need to restore the housing market to its vibrancy so that more of our citizens can pursue their version of this dream," unquote. In order to restore this vibrancy, my partner and I stand resolved. The United States federal government should reform its policy or policies for the finance of the purchasing of single-family dwellings, excluding policies enacted for COVID-19 pandemic relief. Definitions. Reform, to put or change into an improved form or condition, from Merriam-Webster. Fannie Mae, the Federal National Mortgage Association, typically known as Fannie Mae, is a government-sponsored enterprise, GSE, founded in 1938 by Congress during the Great Depression as part of the New Deal. It was established to stimulate the housing market by making more mortgages available to moderate to low income borrowers, from Investopedia. Freddie Mac, the Federal Home Loan Mortgage Corporation, is a stockholder-owned government-sponsored enterprise, or GSE, chartered by Congress in 1970 to keep money flowing to mortgage lenders, which in turn supports home ownership and rental housing for middle-income Americans, from Investopedia. Finance, to supply with funds through the payment of cash or insurance of stocks, bonds, notes, or mortgages, to provide with capital or loan money as needed to carry on a business, Black's Law Dictionary. Secondary mortgage market, the market for the purchase and sale of existing mortgages, loans as long-term investments, from Free Dictionary. Harm 1. Financial insecurity. Fannie and Freddie have not had a bright history when it comes to their financial state. Even before conservatorship, they were undercapitalized, as the article, "The Case for Privatizing Fannie Mae and Freddie Mac Grows Stronger," by Peter J. Wallison, The American Enterprise, May 1st, 2004, points out, quote, "The Office of Management and Budget, in the analysis that accompanied the President's 2005 budget, declared that Fannie and Freddie were undercapitalized, in need of serious new regulation, and failing to perform an important part of their mission to provide affordable housing," unquote. They were undercapitalized in 2004, and they were still undercapitalized in 2021. Government-sponsored enterprise at the Crossroad by Michael Calhoun, Brookings Institute, February 23rd, 2021, quote, "The GSEs is operated with limited capital at a time when the country needed substantially increased focus on and support of affordable housing from the GSEs," unquote. Our goal is to fix this unbalanced system and re-stimulate Fannie and Freddie financially. Harm 2. Lack of competition. Not only do we find a lack of financial security in the status quo, but we're also faced with a shortage of competition. Currently, Fannie Mae and Freddie Mac are under the authority of the national government, which means that the government, to an extent, controls the housing market. From Fannie Mae versus Freddie Mac, What's the Difference? By Sarah Sharpley, Bankrate.com, October 13, 2021. As of 2020, Fannie Mae and Freddie Mac own 62% of conforming loans, unquote. The government owns 62% of conforming loans. This is a danger and a hindrance not only to the free market, but to the housing market as a whole, as it was a major part of the bursting of the market bubble in 2008. Mandate 1. Privatize Fannie Mae and Freddie Mac. Our plan will enact the following proposal by Thomas H. Stanton, a fellow of the National Academy of Public Administration and adjacent faculty member at the Center for Advanced Governmental Studies at the Johns Hopkins University. Quote, 1. Ending the purchase of mortgage-backed securities. 2. ending scrutinization after 6 months. 3. Allowing Fannie and Freddie to form holding companies. 4. End GSEs over 5 years, unquote. More evidence can be provided upon request. Funding staffing, normal means. Enforcement, normal means. Agencies include Congress, the President, FHA, FHFA, and the House of Austin's Federal Housing Enterprise Oversight. Advantage 1. Our plan gives Fannie and Freddie the stability they need to operate smoothly and efficiently. Fannie and Freddie's financial future will now be stronger and safer with the affirmative plan. From Fannie Mae and Freddie Mac as the federal role in the secondary mortgage market. By Congress of the United States Congressional Budget Office, cbo.gov, December 2010, quote, private scrutinization market functions smoothly in most circumstances, and when they do, they may produce a more efficient allocation of capital in the economy and better incentivizes property price and management risk than alternatives with large group government role, unquote. This means that they will no longer be undercapitalized in past years. Fannie and Freddie will now have the necessary capital to function at its optimal best without risk of running out of funds and facing a government bailout. Advantage 2. Fostering competition. With the enactment of our plan, the mortgage market will see a boost in competition as private sector companies step up to the plate to perform these market tasks. From The Future of Mortgage Market and Housing Enterprise by Peter J. Wallison, as previously cited. In addition, the private system will encourage more innovation, efficiency, and competition. With many other players joining the secondary mortgage market, competition should bring down mortgage rates. Privatized entities would have the flexibility to react to changes in the economy and the financial markets, and it incentivized to do so. Finally, privatized companies are not likely to have an obligation to provide affordable housing financing to targeted groups as a mission that was responsible for Fannie and Freddie's overwhelming losses. This mission would be assigned to government agencies such as FHA, so the losses, if they occur, will be transparent, unquote. This will confidently ensure that the government will have limited oversight in the housing market, allowing Fannie and Freddie to operate efficiently and without constraint. In conclusion, the affirmative team's plan will rescue the housing market from its perilous harms that it faces with the mortgage behemoths. Fannie Mae and Freddie Mac. It will place the entities in a free market by ending its government oversight, which will greatly improve its fiscal state to weather another housing crisis and provide mortgages for future home buyers. It will also introduce more competition into the market, which is vital for the growth of any free society. Our plan will bring about the American dream of home ownership that most Americans long for. From privatizing Fannie Mae, Freddie Mac, and the Federal Home Loan Banks, Why and How by Peter J. Wallison and others. It's about the American Enterprise Institute, 2004, quote, the question still remains whether Fannie and Freddie deliver benefits to the housing economy that outweigh these considerations. Here, the answer is no, unquote. Thank you, and I now stand open for cross-examination and any further clarification.
Good evening.
Good evening.
So do you have any plan advocates?
Our advocate, we said in our mandate, was Thomas H. Santon, a fellow of the National Academy of Administration.
Okay. So does Fannie Mae themselves give out loans or mortgages?
No.
Okay. Does Freddie Mac themselves give out loans or mortgages?
They do
okay.
not.
Would there be some sort of leadership change with privatization?
No, there wouldn't be a large leadership change. There wouldn't be leadership change.
Okay, so with your plan, are you basically just detaching them from the FHA?
Yes.
FHFA, okay.
We are making them a private.
Okay, so where exactly would their losses go?
They, my partner can provide further information about that.
Okay, cool. Okay, can you restate your Advantage 1 tag?
Advantage 1,
Yes.
fiscal stability.
Okay. I believe you said that Fannie Mae and Freddie Mac combined killed about 62% of the market. Is that correct?
They have 62% under their control.
Okay. So you said probably Fannie Mae and Freddie Mac have somewhat of an advantage compared to other companies similar to them. Considered currently they are under.
Yes.
Okay. So they're likely, they have more of an advantage, they can provide more, correct?
Yes.
Okay, so are there any companies similar to Fannie Mae and Freddie Mac as far as lending?
I don't have that information with me.
Okay. So how exactly would they be attaining funds?
They would be attaining funds through their own business.
Okay. So would you say likely, since they are a lot larger than any other companies and any other smaller companies would not be able to sort of bear the same load, there would be less loans offered?
There will be loans offered. There is adding more competition, which means new businesses who want to buy and sell mortgages will now be able to do that.
Okay, but say, is there any sort of anything at all stopping them from currently doing that?
As they're a duopoly currently.
Okay, so considering that they're a duopoly and they have many benefits, advantages than any other sort of, say, private company as currently, they're probably able to provide a lot more mortgages than any other smaller.
Yes.
Okay, so that would likely mean, since by getting rid of them, making them private, and they don't have all the benefits from the government, such as government funding, if they decide to, offer subprime mortgages, you'd say probably getting rid of that, there'd be less mortgages offered in general.
Could you restate the question?
Okay, so say since currently having them under the FHFA, they can make risky moves such as dealing with subprime mortgages, and if they fail, they just simply get government money. And other companies can't do that, but once they are privatized, they will no longer be able to do that, meaning they'll be able to offer less mortgages.
They will still offer mortgages.
Okay, well, out of time. Negative team starting cup time with 5 minutes. Computer team, stopping prep time with 1 minute and 31 seconds.
Ready? Affirmative team ready? Quote, one of the greatest mistakes is to judge policies and programs by their intentions rather than their results. This was said by Milton Friedman. And while the affirmative team thinks that their case will work, the facts as they stand are that, quite simply, the status quo, we are better off as things are than as things will be if the affirmative team's plan is put in place. Starting out with harm one. Secured financially. Currently, the GSEs are secure financially, unlike what the affirmative team is saying, that they have financial insecurity. And this can be evidenced in many respects, but from an article titled Effects of Recapitalizing Fannie Mae and Freddie Mac Through Administrative Actions, published August 2020, written by Mitchell Remy, and from the Congressional Budget Office, says, quote, one key administrative action, which has begun to a limited extent, is letting Fannie Mae and Freddie Mac pay less of their earnings to the Treasury so they can rebuild their capital reserves as a cushion against future losses. This report examines what could happen if the Treasury changed its agreements with the GSEs to allow them to build up capital reserves, similar to those required for other large federally regulated financial firms, end quote. What this is saying is that the GSEs, Fannie Mae and Freddie Mac, are already on their way and are quite simply, they are there. They are secure financially. And so what the affirmative team is saying about insecurity is simply not true. Moving on to harm two, beneficial duopoly. Judge, what the affirmative team is saying is correct. Fannie Mae and Freddie Mac are the big GSEs in the market, but that's the point, is that they compete with each other and they provide beneficial services to the nation. The article Fannie Mae versus Freddie Mac, What's the Difference?, published by the Mortgage Reports on October 18th, 2019, and written by Peter Miller, says, quote, in fact, Freddie Mac, which came after Fannie Mae, was created to be its biggest rival. Their competition in the mortgage market helps keeps rates low for American home buyers. They both set standards for who and can and can't qualify for a mortgage, but one of the two might be friendlier toward your situation and offer a lower rate, end quote. What this is saying is that we have competition in Fannie Mae and Freddie Mac, and that's what keeps the mortgage market going. That's what gives competitive rates. And so simply put, it's not a monopoly. Yes, GSEs cover a vast majority of the mortgage market, but that's not a bad thing. They're two big GSEs that compete with each other and give us low rates. Under Mandate 1 and privatizing Fannie Mae and Freddie Mac. First, I want to mention disadvantage 1 of less loans offered. With the affirmative team's plans of privatizing Fannie Mae and Freddie Mac, as we have already mentioned, they are big providers to the mortgage market. What is going to happen when we lose those huge providers that stabilize the American home housing market, Judge? The affirmative team doesn't tell us what is going to come back up and fill the gap, per se. The article, Fannie Mae and Freddie Mac why they matter when getting a mortgage, published June 8th, 2020, written by Hall and Bundrick and from NerdWallet, says, quote, Fannie and Freddie loans have competitive interest rates and low down payment options. But the biggest benefit of Fannie and Freddie loans, they are the mortgages most lenders prefer to make. There is a ready market where lenders can sell the loans, earn a profit, and gain more capital to make additional loans, end quote. Howland Bumdrick is a certified financial planner and a former financial consultant and a senior investment specialist for Wall Street firms. What this is saying is that Fannie Mae and Freddie Mac are lenders' go-to providers for funds because that's what lenders want when they make a loan. Taking that away from lenders, who knows what's going to happen in such a crazy mortgage market that we already have. When we take away the one thing that stabilizes us, we have no clue what is going to happen. And so it must be considered that less mortgages will be offered, creating a much less stable market. And that is what advantage one for the affirmative team was, stability. And quite frankly, that can't happen with the disadvantage that we already mentioned, Judge. There is no certainty in this part of the affirmative team's plan. The housing market is a great thing for all of America. It's an American dream to own a home, and the GSEs are one of the number one providers for that. And through privatizing the GSEs, we have no clue what will happen, and that could totally bungle up the current situation. Thank you. I now stand open for cross-examination and further clarification.
Good evening.
Good evening.
Did you address Mandate 1?
Just slightly.
Okay. And could you repeat the title of the evidence you used in Harm 2?
In Harm 2? 1 moment. I'm sorry, 1 moment. Yes, it was Fannie Mae versus Freddie Mac. What's the difference?
Thank you. And did you address our advantages?
I addressed advantage 1.
Okay, thank you. You said in disadvantage 2 that the mortgage market is very crazy.
Well, the mortgage market, I mean, as most markets are, is constantly changing.
Okay, thank you. And is two entities better than like 5 entities in doing working or selling a certain product? Is it better to have like 2 stores that sell the same product or 5 stores that sell the same product?
I think it depends.
Okay, thank you. No further questions. Affirmative team starting prep time with 5 minutes remaining. stopping prep time, 1 minute and 55 seconds remaining.
Quote, private loans will utilize existing resources and capital far better than government loans. Government loans will waste far more capital and resources than private loans. Government loans, in short, as compared to private loans, will reduce production, not increase it, end quote. And that was from Henry Hazlitt's book, Economics in One Lesson. The point here is that when things are owned by the government, such as the mortgage market, as we see, they tend to be less beneficial, less profitable than if they would be in the private market. And as my partner showed in the 1AC, and as the negative team tried to refute, I will again come back and build upon what my partner mentioned at the beginning of this debate. So that takes us into harm 1, which is undercapitalized markets. Like as my partner stated, is that the mortgage market right now does not have the money it needs to sustain itself. And I have another piece of evidence from Privatizing Fannie Mae, Freddie Mac, and the Federal Home Loan Banks, Why and How, by Peter J. Wallison and others, published on the American Enterprise Institute in 2004. It states, quote, Fannie and Freddie purchase various kinds of derivatives, such as interest rate swaps. What is more, none of these hedges is perfect, and achieving complete protection against interest rate risk would drastically reduce Fannie and Freddie's profitability. That Fannie, at least, was following this course was demonstrated in mid-2002, when the company reported a negative duration gap of 14 months, indicating that the average maturity of its liabilities exceeded the average maturity of its assets by 14 months, end quote. Judge, what this is saying is that Fannie Mae and Freddie Mac is basically squandering their money. Well, what are they squandering it on? Judge, they're squandering it on risk. They're, in a sense, buying risk, unnecessary risk, and it's really dumping their money down the drain, you could look at it. And it's not beneficial to the company at all. In fact, it's a hindrance. Now, that takes us down to harm 2, which is a detrimental duopoly. So the negative team came back and said that, well, right now they have competition in the market. Well, they have a little bit of competition, yes. They compete with each other. But just think, Judge, 2 entities compete with each other. You may have a little bit of competition. But think of this as 2 entities competing with 6 entities. Think of all the competition that will be coming in, all the new innovations and ways coming in. And I even have a piece of evidence that states that this duopoly is, for lack of a better way to say it, perverse. You know, it comes from Mark Zanti, A More Promising Road to Reform, again by Mark Zanti, published on the Urban Institute in April 7th of 2016. It states, quote, in today's housing finance system, the 2 behemoth institutions, Fannie Mae and Freddie Mac, control most of the core infrastructure in the secondary market and take most of the credit risk. Our reliance on this duopoly created perverse incentives that ultimately led to too much risk-taking, forcing taxpayers to consider the resulting cost, end quote. So again, we can see that if we have more competition, there will be less risk-taking in the market and more hope of restoring that balance and reducing the risk. That takes us on to our mandates, which the negative team didn't really address. They briefly mentioned the tag, but they didn't argue the point that we made. And as CCA rules state that no arguments without evidence, or arguments without evidence, it's nothing more than an assertion. So I actually have a piece of evidence backing this plan by the plan that was proposed by Thomas H. Stanton. It again comes from the Case for Privatizing Fannie Mae and Freddie Mac Grows Stronger by Peter J. Wallison from the American Enterprise Institute. Quote, when Fannie and Freddie were free of criticism and threatening legislation, when they had convinced the markets that they had complete control of their political risk, it made a great deal of sense to remain as GSEs. In the circumstances they face today, the answer is no longer so clear, end quote. So again, that just backing the case that we need this plan, that we need to enact this plan that Mr. Stanton proposed. And that takes us down to advantage 1, fiscal stability. again, another piece of evidence that states how the private market is better at managing capital. It comes from the CBO.gov in the article Fannie Mae, Freddie Mac, and the Federal Role in the Secondary Mortgage Market on December 2010. It states, quote, private securitization markets function smoothly in most circumstances, and when they do, they may produce a more efficient allocation of capital in the economy and better incentives to properly price and manage risks than alternatives with a larger government role, end quote. Again, it just states that in a private sector economy, capital can be allocated. It can be spread out through the entire economy. While as in the public sector, in a government, in government control, it can't regulate the revenue as well. Now down to advantage 2, which again, the negative team dropped. They did not bring any arguments against it. They did not bring any evidence, and they did not try to refute what we said. This is a dropped argument. And again, any assertions made without evidence, or in this case, any assertions that weren't made at all, do not apply to this round. However, we actually do have evidence that we will be fostering competition in the private sector and in the mortgage market as a whole. It comes from Making a Fannie and Freddie We Can Live With by Mark A. Calabria and Alex Pollack from the Cato Institute, published August 27, 2015. Quote, Congress should give chartering authority for additional national mortgage associations to the regulator and allow anyone who can meet the requirements to get a charter and compete. A more competitive market will deliver greater value to the public, end quote. Judge, greater value to the public, who doesn't want that? I mean, this sounds like, obviously it's something that we should ultimately strive to do in any market. I mean, whether it's the mortgage market or the postal market or any market that we face ourselves in. So, Judge, in conclusion, I would just like to, again, restate, we're going to be, this plan, once it's enacted, we'll see that the market will be capitalized, as our Advantage 1 states. We'll have more fiscal stability in the market, and we will remove the undercapitalized market and bring more revenue and money back into the system. And as our Advantage 2 pointed out, we will have competition so that more people can come in, and we will, while, like I said, they do compete somewhat with each other, we will be bringing in more competition so that it will become even more profitable. The market will have even more money to support itself. So, Judge, for these reasons, that's for the rebuttals. Thank you. I stand open for cross-examination and further clarification.
Good evening. So, was the evidence under Harm 1 reference referring to 2002? Is that correct?
I believe so.
And was that before the market crash in 2008?
It was before the market crash. That's when things were good, and then the market crash happened, and things became bad, and have been bad ever since.
Was that almost 20 years ago? 2002.
Yeah, it was about 20 years ago.
So have Fannie Mae and Freddie Mac made changes just in their system since then?
They have decreased in quality since then, yes.
But they have made changes.
Bad changes, albeit, yes.
Okay. And Freddie Mac was created after Fannie Mae, that's correct?
Yes.
Okay. And the purpose of Freddie Mac being created was to compete with Fannie Mae, is that correct?
It was made to compete, but as we stated, is that one competitor is not the same as 6 competitors.
Okay.
You just can't compare it to each other.
Thank you. And is it true that that Fannie Mae and Freddie Mac have different requirements for the loans that they will take on?
I don't believe I have any evidence about that.
Okay, but can you say that they are, being two different companies, a little bit different?
They are 2 different companies, but they have the same basic function in the mortgage market.
Okay. And is it true that, as had been read in previous speeches and previous speech, that Fannie Mae and Freddie Mac are putting money into a fund for capitalization?
They may be putting money into a fund, but they are not using it to the best of their abilities, and henceforth they're still uncapitalized.
But they have a fund which the purpose is capitalization.
Well, every business has a fund. Now, whether it's a good fund or a bad fund is,
Okay, thank you. No further questions.
thank you.
Negative team taking no prep time. Affirmative team. Quote, we are free to choose our paths, but we can't choose the consequences that come with them. Quote, this is from Sean Covey. Now, I partially agree with this. Now, in the instance of the affirmative team's plan, we can choose our actions and our, what will happen and what we can do. However, we can also see some of the consequences. As my partner has laid out, and as the negative team, we have seen the consequences. Are these good consequences? No, not at all, and as we'll see here. Now, to clarify, we have bundled the harms and advantages as they are simply mirroring each other and basically exact same arguments. Starting off with harm 1, financially secure. Currently, Fannie Mae and Freddie Mac are both on their way to being fully capitalized and are already setting money aside. There's no sort of issue to even think that they don't have enough money. According to our Fannie Mae and Freddie Mac, Ready for the Next Housing Crash, published May 13th, 2021, written by Mark A. Calabria, who also wrote a piece of evidence read by the affirmative team, and from the Wall Street Journal, who is the former director of the Federal Housing Finance Agency, which regulates and supervises Fannie Mae, Freddie Mac, and the Federal Home Loan Banks. He holds a doctorate in economics from George Mason University. He states, quote, the good news is that likely, unlike the crisis in 2008, should the GSEs fail again, creditors, rather than taxpayers, can absorb the losses. That's because the Federal Housing Finance Agency, which I direct, completed a new rule last month that creates a process to end taxpayer bailouts of the GSEs once and for all, end quote. Basically, as not just maybe a year ago, what they did is they decided to have it verified by the FHFA that what they can do is with their profits, they can take a small percentage and they can set it aside to be prepared just in case there is a crash. Now, I'd like to point out, as my partner pointed out in cross-examination, the evidence they read was from 2002, specifically referred long before any sort of significant changes have been made. So currently there have been changes, beneficial changes, to already cushion any sort of blow from any sort of bailout from the taxpayers. So as we can see, they are they're on their way to be fully capitalized and are fixing any sort of issues they currently had in the past. Harm 2, beneficial lack of competition. The the affirmative team keeps throwing around this idea that, 5 versus 2 or 6 versus 2, this, it's a great thing. We'd rather have the 5 versus 2. Now, let's step back a little bit. Now, if you really think about this, as my partner stated, it depends. Now, in the instance of Freddie Mac and Fannie Mae, in the mortgage market, we have all these other smaller, say, these 5 or 6, as the affirmative team is referred to. They are simply not on the same level as Fannie Mae and Freddie Mac. Albeit Fannie Mae and Freddie Mac are government entities. No other companies are like them. With Fannie Mae and Freddie Mac, they can offer more. So really, if we look at this 5 and 2, the 2 is a lot better considering they get the job done a lot better. They allow more mortgages. They offer more mortgages, more housing. This whole overarching idea presented by the affirmative team is this, we want widespread housing. We want everyone to have a house. Currently in the status quo, that's what's happening. By getting rid of that, we're lowering the amount of housing, since by privatizing Fannie Mae and Freddie Mac, I'd like to point out, is they hold 62% of the mortgage market. So by just eliminating their government connection and them to be able to take risks as they should to provide housing, you're going to see less housing, less mortgages offered. No one can do it like Fannie Mae and Freddie Mac. Absolutely no one. No one is feasibly possible to be able to make risks like that. I'd like to read a piece of evidence. It's from Michael Bloomberg, Merge Fannie Mae and Freddie Mac, published by Emport and written on February 18th, 2020. It states, quote, the rivalry between Fannie Mae and Freddie Mac is critical for maintaining the competitive DNA of the two organizations to ensure innovation in disruption that serves lenders and borrowers alike, Rude said, end quote. Basically what it's saying there is they were made to compete. When they were made back and when Fannie Mae was created and Freddie Mac was later created, They were made to have this this more competition where they were able to go against each other because they have the government backing. They can end up providing more loans, cheaper for homeowners, and as a result, it's a lot better for borrowers and lenders. Now moving into Mandate 1, which is the harmful privatization. Now, albeit this is very hindering change for a system that never needed change. It's perfectly fine how it is. It's booming every single goal they have currently, and as a result, it's a lot better for home buyers, lenders, borrowers, all alike. It's a great system. This is where we brought up disadvantage 1, less loans offered. So basically, like I said, Fannie Mae and Freddie Mac, they're one of a kind. There are no other government entities offering out mortgages. They are very unique in that sense, and they can offer more while being able to take risks that are accounted for. According to Fannie Mae and Freddie Mac, why they matter when getting a mortgage, published June 8th, 2020, written by Hal M. Bundrick and from NerdWallet. It states, quote, Fannie Mae and Freddie Mac loans have competitive interest rates and low down payment options. But the biggest benefit of Fannie Mae and Freddie Mac loans, they are the mortgages most lenders prefer to make. There is a ready market where lenders can sell the loans, earn a profit, and gain more capital to make additional loans. And quote, now Hal M. Bundrick is a certified financial planner and former financial consultant, senior investment specialist for Wall Street firms. Fannie Mae and Freddie Mac loans, they have a low interest rates, low down payments, very beneficial for buyers, first-time home buyers, people who bought homes for a long time. I mean, personally, I like cheap stuff. I don't know about you, I like having to not pay a lot of money for something that is of a lot of quality, such as Fannie Mae and Freddie Mac loans. So as a result, by simply chopping this whole idea out of just having them not connected to the government any longer, there will be less of an opportunity. They can no longer have this risk backed by the government and less mortgages as a result. Now, the affirmative team keeps throwing around this idea, it's 5 versus 2, like I mentioned, but it really makes you wonder, why in the world have these private mortgage people similar to Freddie Mae and Fannie Mac, why aren't they so big? There's this whole idea that, if you make Fannie Mae and Freddie Mac private, there will be, more mortgages offered. I mean, you would think if that's the case in the private market, wouldn't there be less, wouldn't Fannie Mae and Freddie Mac's market share be less than 62%? Wouldn't more people go after these private mortgages? I mean, we just see it there. It's very evident. Fannie Mae and Freddie Mac are one of a kind. People are going to Fannie Mae and Freddie Mac loans for a reason. As we can see, the affirmative team is making a very harmful change to a perfectly working status quo. Thank you, and I now stand open for cross-examination and any further clarification. Good evening.
You said that Fannie Mae and Freddie Mac were already on their way to be fully capitalized?
They are on their way currently, yes. Basically what they're doing is they're setting aside funding a percentage of what they have to attain more capital. So there's no risk of taxpayers.
Did we not read evidence stating otherwise?
I believe you stated something, but as we've seen, this is just a rule that was put out not but a few months ago.
Okay. Have changes since 2002 been good for Fannie Mae and Freddie Mac?
I mean, there's been many. I can't really account for every single one that they have, so I can't give a definitive answer.
Were they placed into conservatorship in 2008?
That sounds about right. They're around them.
Was that a beneficial change?
I mean, as we've really seen, it's allowed them to offer more mortgages.
Alright. What was the title of your Harm 2 evidence?
Let's see here. Michael Bloomberg merged Fannie Mae and Freddie Mac. Basically in it had a small little nugget that talked about, I don't exactly remember what the idea was.
But is merging Fannie Mae and Freddie Mac a good thing for the status quo?
I'm not really certain at the moment, considering it's not the plan offered by the affirmative team, but the piece of evidence wasn't really referring to merging.
Does government intervention harm or benefit a free market?
It really depends on the type of intervention. In this case, it's allowing for more home ownership.
So government intervention in whether or not the judge can buy a home is a good thing?
I mean, if the judge is able to get a home, I would be happy.
Okay, would it be better to, or which would be more desirable, to get a home at the hands of an overarching government or in a private system with individual sellers?
I mean, it really depends. Like the cost is, as we see here, Fannie Mae and Freddie Mac are able to offer them for lower. So as a result, most people like cheap stuff. So I mean, I'm assuming someone would go after something that's a lower price.
Okay, does competition tend to lower prices?
I mean, it can, but in this instance,
Did Advantage One evidence say that Fannie Mae and Freddie Mac sell loans?
I'm going to assume not, considering that is not what they do. Would you like me to check?
Yes. It was Advantage One evidence.
Oh, Advantage One. I think I just bundled the harms and advantages.
Okay. Alright, so it did state that they sell loans.
I'm going to assume not. I can't really find it at the moment.
Okay, thank you. No further questions.
Negative team starting sometime with 1 minute, 31 seconds. Negative team out of time.
Milton Friedman said, "One of the great mistakes is to judge policies and programs by their intentions rather than results." And I read this in my first speech, but I really want to emphasize again that the affirmative team's plan quite simply doesn't work. To start with, solvency point 1, a problem that isn't there. What is the point of fixing a problem with GSEs if the GSEs don't have a problem? The GSEs have been building, Fannie Mae and Freddie Mac have been building capital, and that has been very beneficial, and the affirmative team is trying to look past that and say, no, they don't have any capital. Something that is completely false. The effects of recapitalizing Fannie Mae and Freddie Mac through administrative actions published August 2020, written by Mitchell Remy and from the Congressional Budget Office, says one key administrative action, which has begun to a limited extent, is letting Fannie Mae and Freddie Mac pay less of their earnings to the Treasury so they can rebuild their capital reserves as a cushion against future losses. I'm going to pause right there. what that evidence clearly said was Fannie Mae and Freddie Mac are building capital in their funds to protect against future losses. That is exactly what the affirmative team is saying Fannie Mae and Freddie Mac aren't doing. Continuing on, it says, quote, this report examines that what could happen if the Treasury changed its agreements with the GSEs to allow them to build up capital reserves similar to those required for other large federally regulated financial firms, end quote. And so what that is saying is that this process that the GSEs are now doing has been evidenced to work, and it does work. And moving on to solvency point 2, privatizing Fannie Mae and Freddie Mac is a loss of competition. What the affirmative team is saying is that there is a lack of competition, but the facts as they stand are the purpose of Fannie Mae and Freddie Mac are to compete against one another. The evidence that from the article that we read, that was read earlier in the round, published Fannie Mae versus Freddie Mac, what's the difference, says at the very end, talking about the GSEs, quote, they both set standards for who can and can't qualify for a mortgage, but one of the two might be friendlier toward your situation and offer a lower rate. So what that is saying is that it is because of Fannie Mae and Freddie Mac and their different requirements that there's competition in the market. They are two different companies that have different requirements, which introduce competition into the market, allowing our market, our housing market, to work the way it does, and to have competition, which is what in the end offers borrowers like you and I, Judge, lower mortgage rates. Moving on to significance point 1, less loans offered. As has been evidenced throughout the round, if we take such huge influential enterprises such as Fannie Mae and Freddie Mac and we privatize them without any other plan, as the affirmative team is doing, then we have no clue what is going to happen to our mortgage market. Judge, they haven't told us what's going to take the place of Fannie Mae and Freddie Mac. These are two entities that stabilize our mortgage market. And without those present anymore, who knows what could happen? And the affirmative team has, to be honest, not given us any explanation for what's going to happen, as there will be less loans offered, and as a result, it will make the mortgage market a harder place to work in. I think a good way to explain this is if you have a balloon and it's full of this precious air and there's a hole in it, but you're putting your finger in the hole to keep it from exploding. Well, you can't just take your finger off and assume someone is going to come fill the hole. If no one's around to fill the hole, no one will fill the hole, and the balloon will go haywire, Judge. We have no clue what will happen. The market is not ready for the GSEs to become private. In the affirmative team's plan, there aren't any fingers coming up to fill the hole once we take our finger away. I think a good way to finish this speech is to say the idiom, if it ain't broke, don't fix it. The status quo is working pretty well. It's bringing competitive rates, and it's getting borrowers their loans. That's the whole part of the American dream, is to give Americans their loans at a competitive rate. And that is what the GSEs are doing. They are giving plentiful loans, but through the affirmative team's plan, they're solving a problem that isn't there. There will be less competition, and ultimately, there will be less loans offered. Judge, I hope you surely consider what has been clearly evidenced throughout the round, that the affirmative team's plan simply is not needed.
Affirmative teams resuming prep time with 1 minute 55 seconds remaining. team, stopping prep time, with 56 seconds remaining. Judge, ready? Negative team. Quote, last but far from least, in testimony before the Senate Banking Committee, Federal Chairman Alan Greenspan declared that Fannie and Freddie is a systemic danger to the economy and called for their privatization, unquote. This was from The Case for Privatization of Fannie Mae and Freddie Mac Grow Stronger by Peter J. Wallison, the American Enterprise Institute, May 1st, 2004. This piece of evidence says that they called for their privatization. They needed the Fannie Mae and Freddie Mac need this privatization plan. Under Solvency Point 1, there is the problem of undercapitalization. We've stated in previous speeches about this undercapitalization. We've said different pieces of evidence. Another piece is from The Case for Privatization of Fannie Mae and Freddie Mac Grow Stronger by Peter J. Wallison, as previously cited, quote, the Office of Management and Budget, in the analysis that accompanied the President's 2005 budget, declared that Fannie Mae and Freddie Mac were undercapitalized and in need of serious new regulation, unquote. They were undercapitalized. And then we also stated evidence in our first speech that they were still undercapitalized last year. They may be building up a fund, but that's not there yet. It's not. The fund isn't complete yet. They aren't there yet. They're still undercapitalized. There's still that harm of them not being fully capitalized. Moving on to Solvency Point 2, this is that we will be adding competition to the market. They're saying that we're going to, with our plan, we're losing competition, that there won't be a competition there. Evidence from Future of Mortgage Market and Housing Enterprise by Peter J. Wallison, American Enterprise Institute, October 8th, 2009, quote, in addition, a private system will encourage more innovation, efficiency, and competition. With many other players joining the secondary mortgage market, competition should bring down mortgage rates, unquote. They're bringing down mortgage rates. More competition will bring down those rates, and people like cheaper stuff. I like cheaper stuff. With our plan, we'll be bringing down those mortgage rates because more people will be coming in to fill that. They used a picture of a balloon and you're holding your finger against the hole. What we'll be doing, we'll be bringing more people to cover that hole. We're bringing more people to fix that problem, to stop the air from leaking out of that balloon. Moving on to significance point 2. This is that less loans will be given. Fannie Mae and Freddie Mac don't sell loans. They buy mortgages and make them into MBSs, mortgage-backed securities, which then they sell to different people. And those are and then people buy those from there. That's where the loans come from. The loans come from the banks that buy these MBSs. Fannie and Freddie don't sell them to the people. They don't sell loans to the people. But we won't be losing it. We will actually be creating a greater value of mortgages in the secondary market. Quote, Congress should give chartering authority to additional national mortgage associations to the realtor and allow anyone who can meet the requirements to get a charter and complete. A more competitive market will deliver greater value to the public, unquote. This was from Making a Fannie and Freddie We Could Live With by Mark Calbera and Alex Padlock, Cato Institute, April 27th, 2015. This was saying that there will be greater value. This will help the secondary market. There will be a greater value of mortgages. Just to sum up Solvency point 1, there is a problem of undercapitalization. They were undercapitalized in 2004, and they're still undercapitalized. Solvency point 2, we will be adding more competition. There will be lots more competition to cover this hole in the balloon. And significance point 2, that there will be a greater value in loans and mortgages. The Beach Boys once said, "Oh, wouldn't it be nice?" Unquote. Wouldn't it be nice if our plan was enacted to help the secondary market? Thank you.
Negative team out of time. From your team? Yep. Quote, "We are free to choose our paths, but we can't choose the consequences that come with them." And quotes from Sean Covey. Consequences. With the affirmative team's plan, we're bringing about rather undesirable consequences, such as lower home ownership. Think about that, lower home ownership. In the status quo, there is more home ownership. Who doesn't like having a home? Starting off with Solvency point 1, capital built. As we've stated several times, there are new rules that were implemented not even a whole year ago. According to our Fannie and Freddie Ready for the Next Housing Crash, published May 13th, 2021, as previously cited, states, quote, "The good news is that unlike the crisis in 2008, should the GSEs fail again, creditors, rather than taxpayers, can absorb the losses. That's because the Federal Housing Finance Agency, which I direct, completed a new rule last month that creates a process to end taxpayer bailouts of the GSEs once and for all." So as we've seen, they've already implemented plans to prevent any sort of taxpayer burden. And then the affirmative team brought up a good point that, maybe this won't be ready in time for a next crash of some sort. According to, is a housing crash on the horizon. 8 experts weighed on the possibility, published September 23rd, 2021, written by Swapna Ramaswamy and from Yahoo Finance. She states, quote, "USA Today spoke to 8 experts to find out if a housing crash is on the horizon. The short answer, no. For one, they say the housing market in 2021 is not like the boom-bust cycle leading up to the Great Recession. In the years before the 2008 mortgage lenders made subprime loans to borrowers without verified income or adequate down payments while pushing risky loan products. This time, tough loan underwriting standards are the norm even with rock bottom interest rates," end quote. So as we can see, not only have they implemented change, but they're already in an environment where they can build up enough capital to just in general have enough capital to cushion a blow. So as we can see, we are solving a non-existent problem that was never there. And as we can see, there's no sort of risk of any sort of taxpayer burden as the capital is being built. Solvency point 2, home ownership inducing duopoly. As we've seen throughout this debate, Fannie and Freddie Mac are not like private companies. Making them private would offer less loans. They can't make risky moves anymore. They can't just make moves to be able to offer more loans and to assume and accumulate more money to offer to loans. As a result, by more loans and less mortgages being offered, we would see less home ownership. So by really implementing the affirmative team's plan, this is a very significant problem that we are being solved by staying in the status quo. However, this is completely being reversed with the affirmative team's plan. Significance point 1, lower home ownership with privatization. As a result from Solvency point 2, the whole idea of moving into the private market, we'll see very significant lower home ownership. Currently in the status quo, they are meeting their goals. Basically, they're meeting their goals so they can provide loans to people. According to Supreme Court hears oral arguments in Collins v. Mukin, published January 31st, 2021, written by Patrick McDonald and from Lawfare. He states, quote, "While not government agencies themselves, the pair operate under congressional charters and serve important public missions, which includes providing liquidity, stability, and affordability to the mortgage market. They either hold mortgages from lenders or package them into mortgage-backed securities." end quote. Patrick McDonald is a student at Harvard Law School and Princeton School of Public and International Affairs. As we can see, Fannie Mae and Freddie Mac already have goals laid out that they are meeting 100%. Every bit of their goals are being met. They're already providing liquidity, stability, and affordability to the mortgage market. Take that all away. Just step back just for a second to acknowledge, by getting rid of that, we're relying on people who don't quite have the adequate funding. As I pointed out, if you take your finger out of the balloon, you can't really fill it back up. All the air goes out. There is no one even close enough to be able to patch that hole and be able to meet all the requirements. I'd like to end with a quote that was used by the affirmative team. Wouldn't it be nice? Wouldn't it be nice to have homeownership? Wouldn't it be nice to not have to deal with taxpayer bailouts? Well, that's all in the status quo, and if we keep with our way, we will see all of those benefits. I strongly urge against this very and extremely harmful and detrimental change brought forth by the affirmative team.
Affirmative team, resuming prep time with 56 seconds remaining.
Affirmative team, stop the prep time with 1 second remaining. With the musical theme that we seem to have going on here, I'd like to quote the Beatles. Quote, "Don't make it bad. Take a sad song and make it better." End quote. And that is exactly what we're doing. We are taking a sad status quo and we're going to be improving it, to be making it better. So starting off with solvency point 1, is that there is a problem that exists. I mean, when we look at everything that we have presented, we don't really see how anyone could think that a problem does not exist. I mean, for example, we take a look at an article, Fannie and Freddie, by Chris Edwards, published on Downsizing the Government, July 23rd, 2008, which states, "The large size of the GSEs threatens to create a major financial crisis that should they run into trouble," end quote. Should they run into trouble, which we obviously know they will run into trouble in the future, which I will get to in just a moment. But I also have another piece of evidence that comes from the government itself. It comes from the article was written, was previously cited, privatizing Fannie Mae, Freddie Mac, and the Federal Home Loan Banks, why and how. And the article was quoting Alan Greenspan, who is the former chairman of the Board of Governors of the Federal Reserve System. So someone that is in charge of the nation's revenue. They had this to say, quote, "Our financial system would be more robust if we relied on a market-based system that spreads interest rate risks rather than the current system, which concentrates such risk with the GSEs," end quote. So Judge, we can see even the government is saying that the status quo is at risk. And I mean, also, as I was saying, that, I mean, you can see whenever the government interferes in the market, there will always be a risk, unlike what the negative team seems to believe. They stated that there is no risk right now, that there is no risk of a crash happening. But as we can see all throughout history, whenever the government intervenes in the market, it has its ups and downs, always. That is an economic fact of life that we cannot ignore. That whenever the government involves, crashes will happen. It happened in the early 1900s, the Great Depression. It happened in 2008, and all throughout the centuries. So now we go to solvency point 1. which is where essentially, we need competition. You know, they stated there is competition. They do compete with themselves, but again, Judge, imagine what they could do if they competed with more than just themselves. If they had others to compete with, other people that can make these mortgages and buy and sell these lower mortgages. And from our previously cited Mark Zanti, A More Promising Road to Privatization, it even states the danger that they have on taxpayers and how perverse this duopoly is. And I also have another quote that talks about how the lack of competition, or how competition will actually lessen taxpayer risk, unlike what the negative team stated. It comes from the United States Congressional Budget Office in an article, Fannie Mae, Freddie Mac, and the federal role in the secondary mortgage market, which states, quote, increasing competition in the secondary market would reduce the market's reliance on the viability of any one firm, which could lessen the systematic risk borne by taxpayers. So yes, while they compete with each other, we can see from this article that if we increase that competition, if we add more competition, then it will be even better and less of a risk to taxpayers. So down to the last point, which was significance point 1. Again, Judge, just to clarify a common misconception that has seemed to grow throughout this round, Fannie Mae and Freddie Mac do not sell loans, as the negative team has stated over and over again in this round. They don't sell loans; they deal with mortgages, not the loans themselves, which is they take over the mortgages, and it's a full loop in the housing sector, in the housing market. They buy and sell the loans back and forth to the investors. But regardless of all that, we can still see that there are public complaints that currently exist in the market. From a previously cited article, The Case for Privatizing Fannie Mae and Freddie Mac Grows Stronger by Peter J. Wallison on the American Enterprise Institute, May 1st of 2004, states, quote, Wells Fargo, one of the nation's largest banks and a major player in the mortgage market, publicly challenged Fannie and Freddie's commitment to affordable and low-income housing. Only a few years ago, a public complaint about the GSEs by a participant in the housing markets would have been unthinkable. And Judge, what was unthinkable is now a reality. And it's a reality that we all have to deal with and we all have to focus on. It's a reality that you will have to deal with in your own private life, dealing with making or buying loans or receiving mortgages. It's a problem that we will all have to face. Now, as the negative team stated, we need someone there to keep their finger on the balloon. Judge, why not just fix the balloon? Thank you, and I strongly urge for a negative ballot, for an affirmative ballot. I'm sorry.
How much time do you have?